Hello, this is DrPaulCottrell, and I am doing a analysis on multiple assets and ETFs to explain to you some of the entry points, some of the resistance levels, some of the support levels. But before I do, please go to my store, the-studio-reykjavik.com, and help support the work I do. All these videos I do are for free. You can help support the work by making sure you subscribe to all the channels. I have 4 channels on YouTube: Brighteon, Bitchute, and Rumble. You can also be a paid member to my Patreon channel or donate on my website. At the bottom of the homepage, you can donate through Stripe, PayPal, or buy me a coffee. You can also share the links and ask your social media to follow me. You can follow me on X and on GETTR. All the links are in the description of this video and all my videos. You can also take a look at some of the great products that I offer in the store here. I have ebooks about finance, genomics, artificial intelligence, and endocrinology. I also have supplements and modules teaching you about pulmonology and immunology. For only $50, you learn a lot about pulmonology and immunology. You get videos and downloadable PDFs. When you purchase the module, you get a unique password. You can log into the classes here with your unique password, and then you can start learning about pulmonology or immunology on your own time. You can log in as many times as you want. Now, I also have great supplements, and some of those supplements are the following: structural nanosilver toothpaste, max 35 or max 14, which help boost up your immune system. You take a teaspoon a day, swish it in your mouth and gargle about 20 seconds and then swallow. I've been taking these for over 5 years every day. If you're not feeling well, take a tablespoon or two and then go back to your maintenance dose once you start feeling better. It's great if you're not feeling well, or even if you have poor air quality or have allergies. Structural nanosilver gel, I have 2 types. I have the tube form and the quick dispenser form here. They're a dual purpose product. You can use it as an aftershave. You can use it as a daily skincare. You can put it on wounds and it'll help to heal quicker. If you're not feeling well or someone around you is not feeling well, put it on your hands, around your nose, around your mouth, around your eyes, around your ears. Lightly coat your nostrils. It stays active for 5.5 hours. Structural nanosilver soaps. I have 4 varieties. You can get it in charcoal tea tree, lemongrass, peppermint, and lavender. I have 3 types of drops, which are smaller than the lozenges. You get 100 in each bag. You can get it in blueberry, honey and lemon, and cherry flavor. I also have in stock the structural nanosilver elderberry zinc lozenges. You get 21 in each bag. So get a few bags for your household. Be prepared. They're great for the allergy season, if you live in poor air quality, or during the cold season. I have a probiotic that is in a veggie cap form, very high quality, really important as a foundation to populate your gut with a good microbiome, and that will help you to reduce inflammation, improve your gut immune system, and your metabolism. Cleanse, very similar to the max 35 and max 14. This is a 30 parts per million. So I have them at different price points and at different ppms. The multivitamin is a great foundational part of your health protocol. And here you get vitamin C, vitamin A, vitamin D3, vitamin E, B1, B2, B3, B6, folate, B12, zinc, iodine, manganese, selenium. So it's a great supplement to start with and build your health protocol off of that foundation. I also have C60. C60 you can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. It's a C60 is a very strong, very potent antioxidant. It'll soak up free radicals, reduce stress in the cell, boost up the health of your mitochondria. You'll have more ATP. Your cells will function better because they have less stress, they have more energy. And what you'll notice is that your tissues, your organ systems, your glands, your endocrine system, your immune system are going to be performing better, even your neurons. So take C60, take a teaspoon a day every day. I have D3, which is very important to absorb calcium. It's also a gene expression cofactor, and it helps to get rid of cells that need to go into apoptosis. D3 is very important for bone health and for cardiovascular health. Vitamin C with magnesium, very important for your skin, brain health, and for your immune system. Omega-3, great for helping with your cardiovascular system. Ashwagandha root helps to control your cortisol levels and your blood glucose levels. Very important for your immune system and for your cardiovascular system. Good night formula will help you to get into 3 cycles of REM sleep and deep sleep. That will help you to consolidate memory, detoxify your central nervous system, and to have a energy level in the morning that will allow you to conduct your day without being tired. So it's very important to take the Goodnight formula. It has tryptophan, melatonin, GABA, and passion flower. The premium probiotic is a powdered version. This is the one that I take, but both probiotics are very important, very high quality. So use either the powdered version or the VeggieCap version that I mentioned before. Resveratrol is something that I've been taking for decades. Resveratrol is an antioxidant. It also helps with youthful gene expression, helps with the health of the mitochondria. So your energy levels are better, less stress on the cell because it's soaking up those free radicals. And it helps to get rid of cells that are in senescence. It stacks really well with C60, NAD+, and ubiquinol. Vitamin B complex, very important to take if you're 40 years of age or older, and it also helps to protect your neurons and helps with metabolism. Turmeric will bring down inflammation, also soak up free radicals, very important for your immune system and your cardiovascular system. Magnesium and zinc, very important for your immune system and brain health. Collagen, it's a dual purpose supplement that's going to help with your skin, your nails, your hair, your joints, your cartilage, your musculature, and your bones. It's a powder, you take it every day. Clarity factor gets rid of brain fog. It'll help your neurons to fire more frequently, build that positive neuroplasticity. So take it every day so you can concentrate on tasks. Olive leaf extract, very important for your immune system and your cardiovascular system. Brings down inflammation and helps to control your blood, your lipid profile. Myotrol helps with gene expression to build muscle and to maintain muscle. This is very important to take when you turn age 40. You need to do resistance training, take Myotrol. It has polyphenols, flavonoids, and lignans. Boomer Boost has 68 nutrients. You can take a look at the label here. It's very comprehensive. It's a great supplement to take every day. And it's going to target a few different systems. It's going to target your heart, it'll help with your heart and your vascular system. It's going to help with your brain function. It's going to help gaining strength and boost up your metabolism. You're going to lose weight. You're going to start noticing the differences. You're going to have more vitality within about 72 hours. Gladiator barley helps to build strength, detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. Heirloom barley doesn't focus on the strength like the gladiator barley, but it does detoxify your body, soak up free radicals, and bring down inflammation. By bringing down inflammation, you're helping your vascular system and your immune system. And you recover quicker when you work out. Ubiquinol is the most bioavailable form of CoQ10 that you can purchase. Ubiquinol is extremely important to take if you're age 40 or older. It's going to protect your neurons. It's also going to help soak up free radicals, reduce stress in cells and in your neurons, and help with the health of your mitochondria. It's going to boost up your ATP levels. NAD plus is a supplement that will boost up your NAD plus levels. So that also helps to repair DNA damage. As you get older, you start to accumulate more DNA damage, but NAD plus helps the natural repair mechanisms to repair that DNA damage. That's cellular DNA and mitochondrial DNA. And NAD plus will help protect neurons. Stacks really well with C60 and ubiquinol. Vitamin K2, MK7 molecule helps cardiovascular health and bone health. Very important to stack it with D3. Nattokinase helps with the cardiovascular system. It breaks up clots. It's fibrinolytic. Nattokinase also helps to control your lipid profile, helps to bring down LDL levels and increase your HDL levels. By reducing LDL and increasing your HDL levels, you're reducing plaque formation. I have high quality deodorants in two types, citrus and peppermint lavender and tea tree. It's a dual purpose product. It helps to detoxify your body and you use it as a deodorant. It's for males and females, made from essential oils from the Himalayas. I also have a plethora of different anti-aging boxes that I'm not going to go over, and longevity boxes targeting different systems of your body at different price points. So take a look at those. Very important to purchase. So with that said, we are going to take a look at the charts now. Okay. I created a few charts and I'm going to start with the S&P 500 because that's the chart that I normally start with. And then we'll go over the other charts. I think I have 5 or 6 charts. All right. So the S&P 500 proxy is the SPY ETF. All right. So I have 2 fib sequences for the ones that have been paying attention to me. I have a longer fib sequence that's going all the way from 2020 crash to the high point, which is 613. Now, we obviously had the sell-off in the last 5-6 weeks. All right. And what's important is that we stopped at the 50% retracement on the small fib sequence. All right. And started marching up. So we have a V recovery that's taking place here. That's the key here. So we have a major support level at the 481 level. And because of that 481, another important support level that as this was starting to recover, it was held by this candle right here, is this 38% retracement, which is almost overlapped with the 23% retracement, which is about the 515 level. All right. And then we started marching up. All right. So in the near term, what we have is a support level at 550, and we have support level at the 575. Now we're close to the 575, bouncing off of that again. That 575 is not a structural support level because it's not part of the fib sequence retracement. All right, so that's what I call a non-structural support level. So 575 is a non-structural support level, but we did gap up. And then some bad news about tariffs, and then it came back down. We also have yield issues, the downgrade from Moody's. So there's a little bit of a sell-off there. but there looks like there's going to be some sort of consolidation that's taking place before the march up again. So we have a non-structural support level of 575 and a resistance level at 600. It's going to take a little bit of time to get to 600 and pass it. We were below it. We're probably going to retest the 575, and then come back up to 600, test it. It might fail, come back down, and then I think the third try is gonna go through. But it all depends on the news, and we'll talk about the news right now, I guess, maybe. So there was some positive news where there was a delay in the tariffs for the EU, and they extended it until July 9th. Japan is supposed to be negotiating before June, so we're running out of time here with Japan. And Putin was supposed to, at least on Friday, seem to move closer to some sort of ceasefire with Zelensky. But in the last 24 hours or so, there have been drone strikes that Trump said that he was upset with, and it seems as though peace and a ceasefire is a little ways away. So there's some negative news that's coming out in terms of warfare in Europe. There seems to be some positive news in terms of tariffs with the EU. And because of the holiday, the for Monday in the United States, we really don't know how the markets are going to react to this news that popped up over the weekend. So we'll have to see. But I suspect that what we're going to see here is some undulation that's taking place, some range bound between the 575 and the 600. But if 575 breaks, we have a support level of 550. And then the next support level would be 515 and a major support level of 481. So, but people have been paying attention to me. Getting in and buying in, even as this thing was falling, was the best thing to do because you've already made money. Now, uh, I still hold high probability that we will hit an all-time high by the end of July. Okay, now that's the S&P 500. Again, major resistance point at 600, non-structural support level of 575, support level structural at 550. All right, now let's go to some of the other ETFs that I want to mention. So BITO is the ETF that I've been looking at that's tied to Bitcoin. Now, Bitcoin is trading at about 109, I believe, as of this recording. Let's just double check here. Yeah, 109.6. So 109,600. Now, BITO is the long ETF that's tied to Bitcoin. Now, there's tracking error to it when you're dealing with an ETF that's tied to an underlying like Bitcoin. All right. But I made two fib sequences here. So the Fibonacci sequence that's going all the way back to 2022. For this ETF, it was at 44.29, and it bottomed out in around November or so of 20. No, the high point was in 2021. And the bottoming out here was in the fourth quarter of 2022. All right. So that's the long fib sequence. And then I have a shorter fib sequence that's from the bottom of the fourth quarter of 2022 to the high point of 2024. Now, it's a little busy, but the price for this is trading at 22.89. All right. So as Bitcoin was starting to fall, this ETF was starting to fall. All right. And it was supported roughly. There's two things to take a look at here. The bottoming out here of this ETF for Bitcoin long is in line with some of the undulations that were taking place during August, September, and October of last year. Okay, it's in line with that. And there is this close alignment of the 61% retracement for the small fib sequence to the 23% retracement of the long fib sequence. All right, so there's a support level between 61% and 23% retracement. And that's exactly what we have here, is that we had this smaller fib sequence, and then it bounced down, supported, and then moved back up. All right. So this is the downturn of this is when Bitcoin was starting to sell off during the beginning of the year, and this part is when it's starting to recover. So what we want to do is focus on what are some of the resistance and support levels of this ETF that's tied to Bitcoin. All right, major support level was at 17, approximately 17.4. Okay. So 1740. And that's where it started to march back up. That's when Bitcoin was trading in the 70s, maybe even 65. I think even Bitcoin hits in the 60s at that time period, but definitely in the 70s. Okay, so it's marching up, okay? And there was a resistance point recently, there was a resistance point at 2149, which it broke. Okay. And surpassed it. And then the next resistance level that was happening over last week was 2250. Those all broke, and now they are support levels. They're not resistance levels anymore. So in short, what we basically have is that we have a support level at 2250, and the next support level is 2149 for this ETF for Bitcoin. So if Bitcoin starts to sell below 109, it's going to retest the 2250. And if it starts to sell at about 105, 103, then it's going to probably retest the 2149. But 2250 is the next support level. But the trade is very close to that, 2289, as of this recording. Okay, and I'm recording this on 5/26/2025. Now, this support level, 2250, if Bitcoin starts to go up and go beyond the 110 range, then this ETF is going to start testing the 2442. And 2442 is right in line with when everything started to sell off. So there's going to be a lot of people here that want to just make up their money if they got in at this moment in time. But there's going to be probably a lot of news saying, oh, it's going to march to 130, 150 for Bitcoin. All right. So 150, maybe even 130,000 for coin. So there's going to be some momentum pushing this past this resistance point. So I suspect in the near term, a little bit of up and down with these candles between 2442 and 2250 before Bitcoin pops over the 110 mark. with some power, with some velocity, and the 2442 will now then it will become a support level, and then the next resistance level would be 2662. Now, what's important here is that 2662 is right in line, right, where there was a little bit of consolidation at the top end of the range before made its little jump, all-time high for Bitcoin, and then went down again. All right. Um, so it's important here that there's some energy building up here. I don't think that there's going to be that much resistance with the 2442. I think that but this also Bitcoin trades, has a high correlation to equities. So if equities continue to move up, and we talked about that through the SPY chart, if that continues to march closer to 600 for SPY, then it's going to have enough power to blast through this 2442 and test the 2662. All right. So again, in summary here, BITO, the BITO ETF for Bitcoin long. The next support level is 2250. The trade is very close to that. And the next resistance level is 2442. And the resistance level past that is 2662. But overall, this seems to be a positive signal to purchase. Okay, next chart. BOIL. BOIL is an ETF for natural gas. If you've been listening to my show, I've been talking about natural gas selling off and then kind of recovering a little bit. So BOIL is an ETF to long natural gas. Cold, K, all right, with a K, is a short for natural gas. So I'm just going to go over the long for the natural gas here. So I did two fib sequences, one fib sequence. The larger fib sequence starts in 2024. All right, and that's the all-time high within that time range. And it bottoms out that was at 118, and it bottomed out at 35 for the ETF. All right. And that was all happening in 2024. And then the smaller fib sequence is the tail end of 2024 all the way into 2025. So with this smaller fib sequence, there's a 78% retracement that has sold off, and we're kind of just above that. All right, we're just above that, and it is somewhat aligned with the 23% retracement from the longer fib sequence. So when you have alignments or something that's getting close, then the more aligned they are, the stronger that number is. But this can be viewed as pretty close. All right. So with this, if we zoom in here, all right, it's trading at the natural gas ETF, BOIL, is trading at 5609 as of this recording. All right. So we're at a kind of a resistance level right on that 23% retracement. We're right there. So this is a resistance level. All right, you can see that candle is just right on there. So we're right on that resistance level. So it's important, and I think I'm showing am I showing I think I'm showing the week chart. No, it's daily chart. Okay. All right, so this daily chart here, each candle is a day. So we're right on that line. All right, really close. So we're at a resistance level because it came down, broke, and then it's coming back up. And it's coming back up and then came back down again. So this was a big gap down, broke the 5140 level, and then it started to come back up and then fell back down. So there is a resistance level. We can call this a resistance level, right? Of that to 23% retracement. That resistance level, right, is at about 55.20 something. So we're just above it, just above the resistance level. So if you look at the trend, it's possible that natural gas is going to continue to go down. So that's why I keep on thinking that it's fighting this level right here. So if it fights it, then we're looking at potentially coming back down at 51.48. Okay. So let's as of right now put a pin in this and say that support level at 51.48 and a resistance level right now at its current trading level, and that is about 55.20. And even though it's trading a little bit above it, we need another data point, one more day of trading to see if it's really going to sustain above that 55 or not. So let's just call that as a resistance level. If that does test up in that next trading day, tests above that 55, then we'll call it a support level. And the next resistance level is going to be the 63.88. And that's going to be the 61% retracement of this. Now, that's behavioral. This is a behavioral. Now, if we take a look at the fundamentals of natural gas does seem to have, there was some talk about higher inventories in the United States. So that was when it started to sell off. Now, natural gas futures is trading in like $3, and it was trading about $3.60 range while it was moving up around here. Once the news came out that there were higher inventories of natural gas, then it started to sell off. This ETF started to sell off, and the futures market for natural gas started to trade at about 3.1. So this is 3.1 is right here. And we're at about 3.3 right now for natural gas. So if we start to hear some news that there's not an oversupply, as stated before, as of up here, then we will march above probably the 60 range on the ETF. If we hear news that there's increased inventories, then we're going to see that it's probably going to retest the 51.48 range. So we need a couple more data points to see here. But we're just starting the conversation with natural gas. All right, next. Oil. All right, now this is the future of oil. And there's two fib sequences. We're looking at going all the way back to the COVID crash, all the way up to the high post-COVID, which was 130 a barrel. And then it started to come back down over time. Now, we have a very strong support level at the 54. And that's because you have the very bottom of the small fib sequence almost aligning perfectly to the 61% retracement from that low from COVID to the all-time high post-COVID. So that's a very strong support level, and it's at the 54. Now, 54, all right, is interesting because it bifurcates, all right, it bifurcates this consolidation pre-COVID. And this consolidation for oil was happening post the shale increase of production. Shale was starting to increase. Shale was starting to explore, and there was additional findings, and then all of a sudden there was this shale boom, and there was an increase in production in the United States, so it dropped the oil price, and then it started to consolidate, right? Now, what's important about this consolidation is that some wells are not that profitable at $60 a barrel. There's other wells that may be profitable at 60, but not at 55. And then many wells not profitable at 50 or below. So there was this kind of consolidation that took place. This big crash was because of the whole COVID crisis. And then it started to come back up. All right. Now we're right at this break-even point, depending on the efficiency of the well. So there are basically three tiers: break even at 60, break even at 55, or break even at 50. All right. So different wells have different break-even points. Different companies run more efficiently than others. So if it trades below their break-even point for quite a while, they'll have to cap the well. When they cap the well, there's going to be a negative feedback loop and force the price of oil to go up. So it can't stay below this level for very long. And that's the reason why 54 is a major support level. Now, as of this recording, it was trading at 61.46. All right. So there's going to be this trading range between about 63 to about 60. And that's what I've been doing is that if it gets close to 60, if it's in the 61 or 60 handle, I buy. And it gets close to the 63 handle, I sell. All right. And there's this trading range here that's anywhere from 50, depending on if you take the outliers or not, but around the 54 range to about the 63, 65 range. All right. If you take the outliers, it's almost like 51 to 65. But you can take those outlier lines out and just kind of average the range. And it's around that range here is around 50, 55 to about 60, 63 or so. But this 54 is a very strong support level. So because 60 is the first tier group in the United States for WTI, where break even is important, it's safe that if you have a handle below 60 or at 60 to buy. If you start to get closer to 63 at this moment in time with the whole tariff issue and OPEC increasing production, then you want to sell. Now, there is an added problem. OPEC is probably going to announce in this week additional barrels of oil being produced. If that is true, then there's going to be there's some stress in the oil market, and it may break 60 and test the 55 range again, but then come back up. So if that does happen, it's probably time to buy more oil, either through an ETF or however you want to do it. All right. So just keep in mind this range here. For me, what I do is I take a look at 60. If it's close to 60, I buy. If it's close to 63, I sell. It's that simple for right now. All right. Next, we did the S&P 500. Now, UST is a ETF that deals with the 10-year bond. And I'm going to be going over the 10-year, the 30-year, and the Fed rate in the next chart. But let's just talk about this. So UST is a long full ETF that's tied to the 10-year, but it's really the spread. It also has the 7 to 10 years Treasuries in the ETF. So it's not just the 10-year. It has the 7 to 10 Treasuries, all right, in this ETF. They're longing. That means that if the price of the bond goes up, this ETF goes up. The price of the bonds go down, then this ETF will go down. All right. But another way to look at it is that when the price goes up, the yields go down. And when the yields go down, or when the price goes down, the yields go up. So if this price is going down, then yields are going up. All right. So that's another way to look at it. But this UST bond ETF, with the small fib sequence, is trading recently at an all-time low, right? Like a 37, all right? The high for the beginning of this fib sequence that goes all the way back, because these are weekly candles here. This is going all the way back to 2020. So we had the price of this ETF at 80.86. That means that the price of the bonds were very high, very low yields. So what was happening during COVID? Zero bound for the Federal Reserve, right? And everyone was moving flight to for safety, and they were buying Treasury bonds. That's the reason why this was so high. Then over time, the stock market started to get better and started to move up. Well, as that was happening, the bond prices would start to go down and the yields were starting to go up, right? And that's what we're having here. So UST should be inversely related to the S&P 500. If S&P 500 goes up, UST should be going down in most cases, not always, but in most cases. When you average the actual movement. Okay. Now, with that said, if the S&P 500 starts to go down, then the UST should be going up. That's the economic theory on this, all right? Unless there's dislocation in the market, which doesn't happen that often. Now, there is a march up of yields in the 30-year on the whole curve, on the whole spread, the whole duration of the curve, especially on the 10s. So as yields are going up, this ETF is going to continue to go down. All right. So you can take the inverse of this, which is PST, and then trade off of that if yields keep on going up. If yields start to go down, then UST would go up. Now, if the Federal Reserve lowers rates, by lowering rates, the bonds are most likely going to go up in price. Now, how do they lower rates? The Federal Reserve lowers rates by intervening in the bond market. You can intervene in the bond market by the Federal Reserve by buying bonds or selling bonds. If they want to put money into the system, they buy bonds, put money into the system, and the rates go down. So if the Federal Reserve is going to lower rates, then UST is going to go up and the dollar index is going to go down. All right, so this here, okay, what do we have as a trading range? Because we're talking about resistance level and support levels. Now, the bond market it doesn't lend itself so well with the fib sequence structure because it's been steadily low for many years and then starts to come back up. All right, because of this whole intervention by the Federal Reserve. So we're going to watch this a little bit, but we have a low at 37.60. So that's a support level. All right. And we have a resistance level at 47.87. We're trading at 41.83 right now. For it to go up to 47.87, which is a resistance level, it would mean that bond prices have to go up and yields would have to go down. So if the Federal Reserve starts to signal that they may intervene, then I would suspect that the UST would go up. If they are starting to signal that if they're not, or that inflation is going to get out of control, or our deficit is out of control, then the bond yields will continue to go up and UST will continue to go down. So right now we're trading at 41.83 as of this recording. So let's state that at this moment in time, there's a support level at 37.71 and a resistance level at 47.87. But you can see that there's a decent range if you have a decent amount of shares in this, there's a decent range that this plays in. All right. Like some of these candles were, $3 a share candles here. So, right now, it's possible that maybe rates will continue to go up, but there is a chance that it could go down. Now, this is the reason why I did this other chart. The next chart I'm going to show. So just keeping in mind that we have 3760 as a support level, right? And we have a resistance level at 4787 for UST, which is the 7 to 10-year Treasury ETF based on price. All right. Now, if you take a look at this chart, which looks a little busy, and I'll explain it. This staircase is the Federal Reserve raising rates, holding rates, and then bringing rates down and then holding again. So they brought rates down back last year in 2024. There have been holding rates in 2025. They were raising rates in 2022 and also in 2023. Okay. Now, this curve here is the curve for the 30-year yield. This curve here is the 10-year yield. And this bottom curve is the spread between the 30 and the 10. So the higher the spread, the more distance there is between the two interest rates. Okay. So right now the 30-year Treasury is trading at 5.05 and the 10-year is trading at 4.54. The effective Federal Reserve rate is at 4.33. Okay, so they've been holding. And if inflation starts to go up, they're going to have to raise rates. If inflation starts to be controlled and unemployment starts to increase, they're going to lower rates. Okay, so we're at a spread between the 30 and the 10 at 51. The last time we've been that high in the spread was October of 2021. All right. So this spread has been steadily been going up. Now, again, the spread is the difference between the two yields. Now, what is interesting here is that you had a even higher spread, almost to 0.75 between the 30 and the 10 back in 2020 and in parts of 2021. We were holding with the Federal Reserve, and then they started increasing, right? And this was when they realized that they had inflation. All right. And as they were increasing, the actual spread started to come back down. Now people would say, well, the spread was getting less before they were going to raise. Well, that they were signaling to the market they were going to start moving. So that's part of the reason why you start to see the spreads coming in before the actual event. So this is starting to come down, right? The spreads are really tight, even though the interest rates, even though the yields on the bonds are going up in absolute terms, the difference between the two, and I would say theoretically, I guess to explain why this is happening, this is at the tail end of the curve, the 30 and the 10. Well, when they're raising rates, they're affecting the front end of the curve. So everyone's more focused on the front end of the curve and not so much on the back end of the curve. And so there's a compression in the spread. So the Fed keeps on raising rates, right? Okay. But the yield keeps on going up. All right. That makes sense. As they raise rates, the yield on the bond should continue to go up. Okay. And the dollar should go down. Right. And the price of the bond should be going down, which makes sense because they're selling bonds into the market. All right. Now they hold. We maintain a decent spread for quite a while, right? And I would say until about July, all right, we started having spreads starting to widen a little bit. All right, so right here. So we have about July, and they're starting to widen now. Okay, you can almost see it here. Right here, there was a widening that's starting to take place. And then it comes back in a little bit, and then it comes, right? It came back down a little bit, and then it started coming back up. So there's a widening that was taking place last year around July time. And we have a decent widening going all the way back to 2021. And that was right here in October. All right. So this spread here is the same that we have here. Okay. This spread here is the same that we have here. But then it started to come back down. So I'm thinking that there is, at least short term, spread, the yield may be going down. Bond prices will go up and UST will go up, even if the Federal Reserve starts to hold. All right. But it is possible that it continues on and continues up. But I think we're near that 5.09 level for the 30. Right? We're at 5.05. So we'll test that. That may be a resistance point. But this spread, I think, may come in a little bit, and there may be a little bit of profit that may pop this and go above the 45. And might even test it, test the 47. Now let's take a look at this. I don't know. Do I have a chart that goes not far enough? Yeah, I do. Okay. Let's just because I haven't taken a look at this in too much detail, but let's do a test here. Okay, this spread here started to go down in 2021 in October. All right. So when that spread started to go down and yields were starting to go down, that would mean the price of the bond would go up. So we should see on the UST on October of 20 that so that'd be around here, I guess. That would be because this is a weekly, I don't have really, October would be roughly around here. We may actually see a little bit of a signal right there where the bonds have gone up. Now, if that's the case, it looks like it went up about a little bit more. Yeah, maybe about $3 a share. Okay, so if we have this spread come in the 30-year and start to go down in yield, we might see UST actually spike up 3. So it's going to consolidate around the 40 to the 45 range and then pop up. So let's say it's trading at 42, you add 3. So it probably will it might test the 45. It might go to 45. Might go to 45 or slightly go above 45 if we see this spread come in and the yields go down. Now you could have spreads come in and yields are going up, which would that then well, if that would happen, most likely it would go the other way, $3 down. And so that would be like 39. So we may have a 39 if yields go up, and we may have a 45 or slightly above 45 if yields go down with that spread. Because this has been at the 509, I think there's going to be some traders that are going to start buying bonds, and when they buy the bonds, the yields are going to start to go down and the price of the bond will go up because they're inversely related. So this is a resistance point here. We're very close to it. So I wouldn't be surprised that we at least get a short-term yield, a spread compression like we saw in 2021 in October. Something like this. I would not be surprised. But you got a lot of the other dynamic is that we have tariffs and this bill that's going through Congress that if it gets passed, potentially adds more debt, and the bond vigilantes may actually be raising the rates. And if that's the case, then UST is going to go down below 40 and probably even test the 37. But we'll see what happens there. But we'll continue on taking a look at this spread. I'm very curious to see if the spread comes in and if the yields will start to come down. And if that's the case, then UST is going to start to go up and break the 45. All right. So that's the overall of the market. We went over the spreads between the 30-year and the 10-year yield and compared it to what the Federal Reserve has been doing over the last few years. We went over the UST, which is a long 7 to 10-year Treasury ETF based on price. So if the price goes up for the bond, this goes up. If yields start to go up, this goes down. The S&P 500, and again, like I said, we have a support level of 5,000 at 575 for SPY and resistance level at 600. We have oil, and that's in a trading range that I've been looking at between 60 to about 63, 64. Natural gas, we're going to start paying attention to this one. This Boyle is the ETF longing natural gas, and that's trading at 56.09. And it's slightly above its support level of 55, 55.23, I think it is. And that's coinciding with the futures price at about 3.3 for natural gas. And it was around 3.6 plus up here for natural gas futures, and then started to sell down because there were high inventories. So this is probably going to continue on, and if we start to hear that inventories have gone down, then this will pop back up. But you can see just in this is daily chart, just within a week or two, you can have a big swing here in price. And that's what you're looking for, and you just want to try to understand where the support levels and where the resistance levels are. I think right now we're just above a support level that potentially could turn into a resistance level if it breaks below. It just depends on if it's hovering there. That's why I'm not so confident that this support level is really established yet for natural gas. BITO, which is the ETF for Bitcoin, that support level is at 2250 and the next resistance level is 2442. Okay, so that's the overview of the market. Thank you for listening. I greatly appreciate it. Please help support my work by going to my website, the-studio-reykjavik.com, and get the supplements that I offer. If you follow my health protocol and you stack these the way I tell you to stack them throughout these different videos that I do, especially my live streams, you will be able to slow down the aging process, boost up your energy levels, and improve your immune system. So please go to my store, the-studio-reykjavik.com. Use the link in the description of this video and all my videos to get to my website. Use discount 5 and you get $5 off. It's all caps, discount, the number 5, and you get $5 off any order. Thank you for listening and have a nice day.